How's it, guys? Welcome back to FX Rhapsody. Today we're going to be focusing on the Euro USD dollar. We're going to be doing top-down analysis starting from the daily, working our way to the hourly time frame. I've also got, for those of you that's going to watch towards the end of the video, just going to show you some nice scalping, about over 200 pips worth of scalping entries that you could have taken on the 15 minutes time frame. So just, continue watching till the end and you'll see those little entries. Please go visit my website. It's on the bottom left corner over here. I'll put the link in the description as well for those of you that's new to trading or just want some nice strategies. Just go visit my website. All these materials on the website. Also preferred brokers, guys. These guys are brilliant. You always need a preferred broker or a nice brilliant broker behind your side when you trade. So just go visit them. And then also, like I said, we're doing top-down analysis and we're using the COT reports on my analysis. So you can download the COT reports for free. It's under the resource tab on my website. Okay, so let us hit the charts. So we're going to start off on a daily time frame, and I'm just going to zoom out a little bit. And then as you can see that the euro has been following this huge downtrend, okay, at the bottom. So I'm just going to draw that. I'm just going to make it nice and neat. So the way I pull my trend lines is you want to see as many of these candles and wicks touching, and that is the way I pull my or draw my trend lines. There's obviously lots of different ways, but I mean that just makes more sense. Then we also have this rising trend line over here, so you can see there's no bit of a wedge forming. So we want to see any break of structure going, past these two lines. So for continuation either upwards or a continuation downwards. So any break of this normally means that there is a continuation somewhere. So wait for that break, wait for that retest, and then we'll trade it accordingly. Especially for those of you that is doing swing trading, just wait and see until there's any break of those trend lines. On a 4-hour time frame, let's have a look at what happened or what is happening. As we know, on the daily time frame, we see that little wedge. So you see that little bit of a, I'm not going to say consolidation, but I mean price not really moving anyway. But you can pull you can just draw your little Fibonacci. So if you had a Fibonacci from this swing low to that swing high, you see that price did not retrace all the way to the 62% area. So I'm just extending my Fibonacci over there. So you have a swing low and then a bigger swing high, and then price retracing all the way nicely to the 62% area over here. Okay, so oops, why did I draw another one? So as you can see, price just hitting that area and then continue upwards. So if you did draw it like that, if you did place that entry, you would have been a nice 138 pips up currently, So, but again, price is still in that area, so we want to see a nice big break of that area for a continuation somewhere. Let us go down to the 1-hour time frame. So at the end of all my videos, or most of my videos on the weekend, I have these areas in the market that I highlight out, and I want to see any break of that area just to, from there on, just trade. Basically trading what the charts gives us or what the price gives us, not just predicting it, but just reacting to what price does. So as you can see, there was a break upwards. Okay, so with this, I'm just going to zoom in a little bit so I can show you. So with this little break over here of structure, okay, right about there, there was a fair value gap that formed. So that's the area between those two candles, as you can see right there. So there's a imbalance in the market, a fair value gap. We have multiple ones. Okay, there's another one, very small one, and then there's obviously one at the top here as well. So just going to show you this one, because there's a lot of them that the price just run through it, but a lot of times price just retraces back to those areas. So as you can see, price going up and then coming down and then retracing nicely to this area, to this fair value gap. It retraced all the way to that area. So just going to zoom in a bit. So now this is where your opportunities lie. So as you see price going down and then going up, what happens is price retraces. Okay, there's a swing high to a swing low. I'm just going to take this out. So you have a swing high, you have a swing low, price retracing to this area between the 62 and the 79% area. That is the area that you want to place your trade in. So in this instance, you could have caught a nice little sell downwards. But I have said this before as well. You don't always have to just wait for the retracement to happen upwards. Okay, you don't have to always sit on your hands. Trade the retracement upwards. And how could you have traded this retracement? Just zooming in, as you can see, where's my tool? Price coming down to this bottom and then consolidating and then breaking again, structure. Right about there. You see that big push, that big bullish candle. With that big bullish candle, there is a gap again, an imbalance in the market that forms between that candle and this candle. And price retracing to this area again. Okay, just going to pull a Fibonacci. Just want to see if this happens. There you go. Almost hitting that 62% area. Okay, but you see price going into that area, into the fair value gap, and that is where you place your first entry because you are trading the retracement up. Okay, so that is another 60 odd pips, almost 70 pips that it traced up, so that you can buy up, and then once price hits your area at the top, the big retracement, then you start selling down. Okay, and you sell down all the way. So where does your exit lie? So normally your first target is always, you know, behind this Fibonacci, the 0. Okay, that's your first target because that area from here, from the 62 to about the 100% or the 0, that's already 70 odd pips. Okay, that's your first target. Second target, if you zoom out, you know that there's always liquidity. Price action hunts liquidity. Okay, where's your liquidity lying over here? Your big liquidity, as you can see, is this area which I highlighted out at the end of last week. And look at that. Beyond this point or below this point, there's some sell orders lying here. Guys buying up, placing their stop losses over here. So price hunting those orders. And look at that. Beautiful. Price just hitting that area and then starting to bounce up. Price doesn't always have to go deep into that area. If it goes behind that area, it means it breaks or it hits that liquidity that's lying at the bottom there. And then price started shooting up again. And then now it's just consolidating at the bottom here, at the top here. So you have a nice little buy up and a nice little sell down. Okay, that's two nice beautiful entries that you could have caught this week already on this pair. I'm just going to take out all this because I want to drill down to the 15-minute time frame. Because we have got, obviously there's different types of traders. Okay, there's lots of different types of traders out there. You get your swing traders, your intraday traders, and then you obviously have your scalpers. Okay, guys scalping the market, and there's lots of them. So let us have a look. Let's take this out. Okay, 15-minute time frame. So now price breaking this area of the 1 hour, the little line that I've drawn in for that. This is my target area to see if price breaks above it, and then I'm going to start reacting to what price does. So price going up and then consolidating a little bit, going down, going up again. So it's just going up and down, up and down. But now within this area, you could find some nice little scalping opportunities. First one is price going up in this area, creating a fair value gap in the market. Look at that. Right there. Okay, there's a nice little push downwards area being created between those two candles, price retracing into that area and then shooting down. Okay, that is a nice little sell opportunity. Again, just showing you the pips that you could have taken right there. It's over 30 pips. Where's your target area? Your target area is obviously below, this area over here where price started turning. Okay, there's liquidity. Liquidity lying below this area in the market. Always look for those areas in the market. Highlight them out because you want to see price action going and hunting that area below it. So as you can see, price hunting that area, taking that liquidity. After that, price started shooting up again. Okay. After that area has been, you know, I'm not going to say violated, but I mean, price tapping into that area, going up again. Then it created another fair value gap. Where's that? Right about here. As you can see, bam. Between that candle and this candle. There's a fair value gap with created. It's very short. I mean, it's 15 minutes, guys. Price going into the area and then shooting up again. Where's your target area of exit? Above. There we go. Above that previous swing high. So there's liquidity lying above this line. So price going in, hunting that liquidity. Okay. So I'm just going to highlight this again. You have got 40 pips downwards. Then you have a buy. Oops. Then you have another buy upwards. And how many pips could you have caught? Another 40 pips upwards. So now you're looking at close to 90 pips already. So now price hunted the liquidity. Now it's doing its consolidation again. If you drill down to your 5-minute time frame, you will find many more opportunities in the market. Okay. Now price started going down again. Now with this downwards movement, okay, as you can see, nice downwards, there's a big bearish candle that formed right about there. And with that bearish candle, again, opportunity. That's an imbalance in the market. And as you can see, price going down, tapping into that liquidity again. Not liquidity, into that, it gets drawn to that fair value gap. Excuse me. Then what you want to do is you place your sell order. Where's your target? Again, liquidity, guys. That's it. That's what you do. Price is going to hunt that liquidity. And that's another 40 odd pips. Okay, downwards. Price hunting that liquidity every single time. Okay, now we go on again. So now what happens? Price going, it's hunted the liquidity. Now it started consolidating again. Now it wants to start moving up. Now price breaks that area, or breaks this previous structure. Let's just pull it there, because that's your previous structure that's broken. After this little bit of consolidation, now you see this big push again. You're always looking for these big candles. Okay, these big bearish or bullish candles. Okay, then there is an imbalance that forms between this candle, the previous candle, and the next candle. Price going, tapping into that liquidity. Right, so where is your target? If you enter there, your target is obviously your previous high. So I'm just going to take this out. Excuse me. Look at that. There's a nice little high that formed there. Right about there. Then if you zoom out a little bit, all these little highs in the market. Look at that, guys. Okay, that's where the big movement started. Right about there. See, those are the areas that price targets. It's all the liquidity, because you can see price consolidating, then it pushed down. So there's a lot of selling that goes on there. And then guys placing their stop losses just above that. Same here, going up, price selling down, guys pushing there, or thinking the price is going to go down. So they're putting their sell orders there and then buys. You understand what I'm saying? So now price hunts that liquidity again. So now you place your buy over here. Price, that's your first target, hitting that. Price going up, second target, bam. There we go. Okay, so that is opportunity in the market. So that's another 60 odd pips up. So again, you know, I can carry on the whole time. But I mean, last little example that I'm going to give you. So price going down, and then it started consolidating again. And as you can see with this downwards push, look at that, guys. Damn, right there. Obviously, there's a lot of fair value gaps or a lot of imbalances in the market, but you're going to start seeing them better. Okay, so you have two over here. There's the first one, there's the second one. And this is a good example, because I've had this comment before. One of my guys asking me which fair value gap should they wait for. For me, is you start pulling these fair value gaps in the market. You highlight them out in the market. So there will be your first one, okay? And then it created another one. So what happens is you wait until price reaches one of them. You have a tight stop loss. And then, you know, a lot of times price doesn't always hit the first one. Where is this? Price could have just gone to that one, okay? Getting drawn to that one and then moved down. But in this instance, it just stayed on the first fair value gap and then done. So if price goes through, if you wanted to trade this one, you would have had a sell order over here with a nice little tight stop loss, okay, and then going down. So if price hunted or hit your stop loss, you know, and if price went up to the first one, you wouldn't have a big loss, okay, and then price started pushing down again. And again, let's just have a look. I mean, price just went down and then started going up all the way. So currently, let's just go back to the 1 hour time frame. So currently we are looking at market. I'm just going to take this out, right, excuse me, right about there. So this is the 1 hour time frame again, guys. So I want to see this area being broken in the market. Okay, I'm just highlighting the 2 areas that I'm focusing on. And I'm just going to make a clone quickly of that. And I'm just going to do that. So those are the 2 areas in the market that I'm going to be focusing on. I want to see price breaking above it or below it, and then we're going to start reacting to what the market gives us. If we look at the COT reports, the euro currently, there's lots of longs being opened in the market and lots of shorts. But previous week, it was just the opposite. So guys, price just in that range again, and that is why we're seeing on a daily time frame that little wedge that formed. We're waiting for big action in the market to see what price is doing. So currently, again, it's just, you know, hunt these little areas in the market. For swing traders, price is not going anywhere yet. For intraday, as you can see, and for the scalpers, there's plenty of opportunity every day to trade this currency pair. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit the like button, hit the subscribe button, hit the notification bell, and also, you know, give me some love by hitting that super thanks button. So guys, I hope you've been having a wonderful weekend. Stay safe and happy trading, guys.